Investors and traders, welcome to the channel. Today we'll be taking a look at the banking stocks, the key banking stocks in the United States, so the big banks. This video is for educational purposes only and it is not a financial advice. What we are looking at is the Spider Fund S&P Regional Banking ETF. So guys, this is the ETF for smaller banks, and part of this ETF were banks which are no longer operating at the moment. For example, the Silicon Valley Bank. Also, for the First Republic, I believe is also part of it. So anyway, if you recall the video which we had done, and I'll try to put a link in the description for it, and also towards the end of the video, we were watching for this pattern which is highlighted in the shaded area, and we were thinking that because the pattern formation support was to come around $46.10 level. However, what has happened is that the movement down was so strong, as you can see. Let me try to blow it up a little bit. Here we go. That market was gapping down over the 2 days. There was a slight perhaps a short covering rally here. It closed the gap here, but it's just been down. And once it looked like perhaps it was going to get to about $38.30 level, which is the 78.6% Fibonacci retracement. However, guys, what has happened today is that the banking stocks have actually rallied and closed stronger today, most of them. And that's why I'm doing the video as well. It looks like perhaps there might be a rally coming in the banking stocks, and that could be a good thing for the broader market, because it's these banks and the bank stocks which let the market down quite severely over the past 3 weeks. And if they begin to rally, perhaps it could be just be a relief, a rally that could be a positive sign for the overall market, such as S&P 500, which we'll take a look at in deeper tomorrow over the weekend. So guys, note that we had a good strong day up today, and it could be an indication that next week perhaps there could be more upside coming in this stock. Just for reference, we'll just quickly take a look where this rally could go. So yeah, it could just try to cover up some of these gaps. Could get up to around $50.45 perhaps, which is 38.2% Fibonacci retracement. Now let's take a look at XLF. So this is the daily chart of the Spider Select Sector Fund financials. It will include certain banks, bigger banks, for example, JP Morgan as an example. So guys, here what we were originally looking for was a pattern formation in an ABCD, which is one-to-one projection, going much lower. However, with today's candle, what appears is that it just tried to touch the lows of going back right to the 14th of July 2022, and there looks like it's a good positive sign in the way the candle has closed, that there might be some sort of a rally coming in this as well, which would be positive for the banking stocks, and we'll begin to look at some individual stocks in a moment. So if there is going to be a rally, then perhaps will the level to watch will be $32.63. Here it could go up to maybe even retrace 50% of that, and where we have some structural resistance as well. So this is what we are watching here. Now if this rally takes steam and we begin to go above $35, then this ABCD pattern we were looking for will be negated, perhaps, because it will also depend how long it will take for the market to get up there, but eventually at some point, as long as these highs are not taken out, the possibility of this thing going much lower still exists, unfortunately, or fortunately, we don't know. But for now, this is what we are watching. All right, guys, let's take a look at JP Morgan. All right, so JP Morgan did close below that 38.2% Fibonacci retracement. It went and somewhere close to the 50% level of this entire rally, and it looks like pretty much like a nice pullback. Whether it's gonna go get down to about 60 1% retracement, which comes around $118 per share level. Remains to be seen if it begins to form good support. That's quite good, because it's a good indication for the broader indices as well. So this is what we are looking at in the in JP Morgan. The good thing is that after closing below the 38% Fibonacci retracement, there could have been perhaps a sharp move lower to the 61.8% Fibonacci retracement. However, based on today's candle, which is negative candle, looks like there is some buying which came in around the 50% level. So that is actually not too bad thing. Let's take a look at Goldman Sachs. So Goldman Sachs, guys, yeah, so this stock has been actually over the last few days been rallying actually around the 78.6% Fibonacci retracement. We do have this longer term pattern which could actually see the stock move lower to $242 or $243 per share level at some point. Before now, it looks like this level around the 78.6%, around $310 per share level, seems to be finding some buyers coming in, and so there is a possibility we could see a rally and a price moving higher in the stock. Let's take a look at Morgan Stanley. So guys, this Morgan Stanley stock, it was one of the better performing banking stocks, and here it seems to have found some sort of buying come in right at the 61.8% Fibonacci retracement, and also this trend line moving higher. So that's a good sign, because it means that it's just a nice pullback into a move higher. And if we just use some market symmetry, and what we can actually see in Morgan Stanley is that it has also held this market symmetry move as well. So last time the market had went when it did go down, it went down by this much. It has done the same thing again, and that's a good thing actually, because it looks like over the next couple of trading days there might be more buying coming in this, which will also be good for the overall market. So again, guys, we have a confluence of two things. We have trend line and a Fibonacci retracement level coming in together, so we need to pay attention. Let's take a look at Wells Fargo. All right, guys, the Wells Fargo is a very interesting one, because it retraced right down to the 61.8% retracement of this entire high, right from the October 2020 lows. So again, if this 61.8% Fibonacci retracement will hold, then the next level of interest will be around this, closing this gap right into the middle of, or close to this candle, around $40 per share levels of $40.37 or $40.40. We do have a longer term pattern in this, which could see the price move much lower, but obviously that depends upon this support being broken at the 61.8% Fibonacci retracement. All right, guys, so I'm just trying to remember any other major bank that we should take a look at. We have covered JP Morgan, yeah, Citigroup. So there we go. So initially we were looking at, so this stock had actually done this ABCD correction higher in my opinion, or in a trading top of the trading range, and it was moving lower. We were looking for an initial level of 41.30 for the stock, but it went down up to 42.11. Let's be precise here. The low came in at 42.01, so it did miss our 41.34 target by some points. However, it looks like again there's a kind of a rally coming in this stock as well. So just we are kind of thinking the banking stocks might rally, and we'll be interested to see the $46 per share level. So I'm just gonna mark this like this. That's the level to watch here. So thank you very much, guys, for watching the video. If you like our analysis in the video, please do subscribe and like the channel. Thank you very much. Good luck and good trading.